Imagine waking up every morning, not to the blare of an alarm demanding your labor, but to the gentle ping of a notification on your phone. A notification telling you that money just landed in your account while you were sleeping, while you were living your life. That's the ultimate dream for so many, isn't it? The dream of true financial freedom, where your money works tirelessly for you, allowing you to reclaim your time, pursue your passions, and truly live life on your own terms. This isn't some far-fetched fantasy for the super rich alone. This is the very real, tangible promise of passive income. But how do you actually achieve it? How do you build a machine that consistently spits out cash without your daily intervention? Today, we're not just going to talk about it. We're going to show you exactly how. We're diving deep into one of the most reliable, time-tested pathways to building a consistent income stream: dividend growth investing. This isn't about chasing speculative fads or trying to time the market. This is about partnering with robust, established companies that generously share their profits with their shareholders and consistently increase those payouts annually. Here's the bold promise of this video. We are going to hypothetically build a real-world $25,000 dividend growth portfolio right now before your eyes. We'll carefully select the types of companies that form the bedrock of such a portfolio, illustrating the principles behind each choice. And then we will unveil the exact annual payout this portfolio could deliver. Think about that for a moment. What could a perfectly crafted $25,000 investment put in your pocket every single year starting today if you had this portfolio? We're not talking about vague estimates or hypothetical scenarios for billionaires. We are calculating the precise dollars and cents that a relatively modest yet significant investment could generate for you. This isn't just about numbers. It's about giving you a tangible, actionable goal, a clear roadmap to financial independence. Now, I can already hear some of the skepticism bubbling up. Dividends? Isn't that just for the rich? I don't have millions to invest. Or, it's too slow, it'll take forever to make any real money. Perhaps you're thinking, it's too complicated. I don't understand stocks, let alone dividend growth. These are incredibly common, understandable misconceptions, and I'm here to address them head-on. Firstly, dividend investing is absolutely not just for the rich. While having more capital can obviously generate more income, the beauty of dividend growth investing lies in its accessibility and the power of compounding. You can start with surprisingly small amounts, and over time, through consistent contributions and reinvestment, your portfolio can grow exponentially. It's a marathon, not a sprint, but the finish line offers genuine financial peace. Secondly, while it might not deliver overnight riches like some speculative investments promise, the slowness of dividend growth is its greatest strength. It's a deliberate, disciplined approach that focuses on sustainability and consistency. We're not looking for fleeting gains. We're building a perpetual money-generating machine. The growth in dividend growth isn't just about the stock price appreciating, it's crucially about those companies consistently raising their dividend payments year after year. This means your income stream grows without you having to invest more money. Imagine getting a raise every year automatically from companies you own. That's the power we're tapping into. And finally, regarding complexity, I promise you it's far simpler than you might imagine. We'll demystify the entire process, breaking down the concepts into easily digestible pieces. You don't need a finance degree to understand the fundamentals of identifying good dividend growth companies. You need common sense, a bit of research, and the discipline to stick with your strategy. We'll show you the tools, the metrics, and the mindset required to confidently navigate this space. This isn't a complex academic exercise. It's practical, real-world investing for everyday people. Throughout this video, we're going to pull back the curtain on dividend growth investing. We'll explore the why behind it, the how to execute it, and most importantly, the what it can pay you. By the end, you'll have a crystal clear picture of how a $25,000 investment can transition from a lump sum into a reliable, ever-growing stream of passive income. So if you're ready to stop dreaming about financial freedom and start charting a course towards it, if you're eager to see the tangible benefits of smart, long-term financial planning, then buckle up. Your journey to understanding how a $25,000 dividend growth portfolio can truly pay you annually begins right here, right now. Let's make some money while we sleep. Last time, we touched on the exciting idea of making money while you sleep. Now, it's time to build the blueprint for how that truly works. We're not just talking about any dividends here, we're focusing on a specific, powerful strategy, dividend growth investing. This isn't simply chasing the highest current yield you can find, which is often a common, dangerous misconception. A super high yield frequently signals a company in distress, risking a sudden dividend cut and leaving investors vulnerable. Instead, dividend growth investing identifies robust companies that consistently increase that payout year after year, decade after decade. Imagine your annual income stream growing predictably through compounding, your income making more income. This is a powerful engine for long-term wealth creation and steadily increasing passive income. We're looking for quality and reliability, not just quantity. So, how do we find these golden geese of the investment world? It comes down to critical selection criteria. First, look for a long, consistent dividend history. We want companies that have proven commitment to shareholders through thick and thin, ideally weathering multiple recessions without cutting their payout. This signals strong management discipline and the company's inherent resilience. Second, healthy payout ratios are essential. This percentage of earnings paid as dividends should leave ample room for reinvestment and future growth, not risk a cut. Third, a strong balance sheet is non-negotiable. Low debt levels and ample cash flow are key to ensuring they can continue paying and growing dividends even during economic downturns. Fourth, we seek companies with a wide economic moat. Popularized by Warren Buffett, this refers to sustainable competitive advantages that protect a company's long-term profits and market share. Think strong brands, patented technology, economies of scale, or high switching costs. These moats make their earnings, and therefore their dividends, much more secure. Finally, consistent earnings growth is the fuel for future dividend increases. Sustainable dividend growth needs underlying profit growth. These 5 pillars form the bedrock of a successful dividend growth portfolio. Now let's truly supercharge this income stream through the incredible power of compounding and dividend reinvestment plans, or DRIPs. When a company pays you a dividend, you have a simple choice: take the cash or reinvest it. A DRIP automatically takes those dividend payments and uses them to buy more shares of the very same stock, often entirely commission-free. This is where the magic truly happens. Imagine your initial investment earns dividends, which then buy more shares. Those newly acquired shares then earn their own dividends, which in turn buy even more shares. It's a powerful snowball effect, gaining momentum with every passing quarter and new dividend payment. Your income grows not just from the company's increased payout, but also from owning an ever-increasing number of shares. This continuous cycle accelerates your income growth exponentially. Over many years, reinvesting makes an astronomical difference to your portfolio's value and, crucially, to your annual income. It's like planting a tiny seed that, with each watering, grows bigger, producing more fruit you then plant again for an even greater harvest. While individual quality stocks are crucial, putting all eggs in one basket is a disaster. Diversification is non-negotiable for a dividend growth portfolio. Spreading investments across various sectors and industries mitigates risk and ensures portfolio resilience. If one sector, like technology, suffers a downturn, your entire portfolio is vulnerable. Diversifying into consumer staples, utilities, healthcare, industrials, and financials protects you. When one struggles, another thrives, balancing returns and stabilizing your income. A well-diversified portfolio minimizes impact if one company cuts its dividend, as many reliable payers support you. It ensures a smoother, more predictable journey to financial freedom and financial security. Finally, understand that not all dividend payers are equal. We classify them. First, dividend aristocrats and dividend kings. Aristocrats are S&P 500 companies with 25-plus years of dividend increases. Kings boast 50 years. These are established slow-growth giants like Coca-Cola. Their dividend growth, perhaps 3 to 7% annually, offers unparalleled reliability, providing stability and consistent moderate income. Then companies with shorter histories but faster growth, maybe 10 to 15% or more annually. These are often younger, faster-growing companies. While exciting, their shorter dividend history means less certainty than aristocrats. A balanced portfolio often mixes aristocrat stability for reliable income with faster growers for accelerated income growth potential. Understanding these distinctions helps tailor your portfolio to your risk tolerance and income growth goals. All right, with that crucial understanding of dividend growth principles, let's actively build our hypothetical $25,000 portfolio. This is where theory meets exciting reality, making your money truly work hard. We'll strategically distribute these funds across 6 carefully chosen, well-known dividend growth stocks. Each investment will be roughly equal, ensuring balanced exposure for both consistent income and robust long-term growth. Our first cornerstone is Coca-Cola, ticker TEO, a true dividend king. It has raised its payout for over 60 years. With a current yield of 3.3%, it offers stable global brand power and consistent demand. Next, healthcare giant Johnson & Johnson, J&J. Another dividend king, its diversified business spans pharmaceuticals, medical devices, and consumer health. It currently yields approximately 3%. For strong growth potential, we include tech titan Microsoft, MSFT. Its yield is lower at 0.8%, but exceptional dividend growth is fueled by dominance in cloud computing and software. Consumer staples stalwart P&G comes next. Owning a vast array of household brands, it generates consistent sales regardless of economic conditions. Its dependable yield is 2.4%. Complementing Coca-Cola, we have PepsiCo, ticker PEP. This dividend aristocrat offers diversified income from beverages and snacks with resilient cash flow and a current yield of 2.9%. Finally, for substantial upfront income, we add Verizon Communications, VZ. As a leading telecom provider, its essential services offer a higher current yield, 6.5%, acting as a strong income anchor. With our 6 robust companies selected, it's time for the exciting part, calculating the initial annual dividend income this hypothetical $25,000 portfolio would generate for you. Remember, we're allocating exactly $4,167.67 to each stock. This equal weighting simplifies our initial calculation, clearly showing each company's contribution to your passive income stream. For Coca-Cola, with $4,167.67 invested at a 3.3% yield, your annual dividend income from KO comes out to $137.50. This is steady, reliable income from a global powerhouse. Johnson & Johnson, with $4,167.67 invested at a 3% yield, contributes about $125 annually.
Consistent payments from a healthcare leader provide foundational strength and stability. Microsoft's $4,166.67 at a 0.8% yield generates around $33.33 annually. While initially small, its explosive dividend growth trajectory makes this a powerful long-term contributor. From Procter & Gamble, investing $4,166.67 at a 2.4% yield brings in approximately $100 each year. These dependable dividends highlight the value of investing in consumer staples. PepsiCo's $4,166.67 investment at a 2.9% yield generates about $120.83 annually, another strong, diversified consumer brand consistently contributing to your growing passive income stream. Finally, Verizon. With $4,166.67 invested at its substantial 6.5% yield, this adds an impressive $270.83 to your annual dividend income. It provides a significant immediate boost. Now, let's tally up these individual contributions. $137.50 from KO, $125 from J&J, $33.33 from MSFT, $100 from PG, $120.83 from PEP, and $270.83 from VZ. And the grand total? Your $25,000 dividend growth portfolio will generate an initial annual income of approximately $787.50. That's $65.63 per month purely from your investments. Now, $787.50 annually might seem modest at first glance. However, this is merely your initial payout. The true power of dividend growth investing unfolds over time. The real magic begins with compounding and reinvestment. This initial income stream isn't static. It's designed to grow significantly year after year if you let your dividends work for you. Let's project this income forward. Assuming an average dividend growth rate for our diversified portfolio of a conservative 7% per year, and that you reinvest those dividends, watch what happens. After just 5 years with consistent 7% growth and reinvestment, your annual income from this $25,000 portfolio could climb to approximately $1,104. That's a 40% increase. Fast forward to 10 years, and that same portfolio could be generating around $1,549 annually. Your income has now nearly doubled without contributing another dollar of your own. And after 15 years, your annual dividend payout could be soaring to approximately $2,173. That's almost triple your initial income purely from exponential dividend growth and compounding. This illustrates how a modest initial investment, coupled with patient long-term dividend growth investing, can significantly enhance your financial freedom. Build a robust, ever-growing income stream. Okay, so we've journeyed through the mechanics and the incredible potential of dividend growth investing. We meticulously broke down how a carefully constructed $25,000 portfolio could realistically pay you over $750 annually in passive income right from the start. That's real, tangible money hitting your account without you lifting a finger year after year. But here's the crucial, often overlooked takeaway. That $750 is merely your starting point. It's the initial seed from which a magnificent financial forest can grow, provided you diligently nurture it consistently over time. This isn't just about a one-time payout. It's profoundly about building a robust, ever-growing income stream that significantly enhances your personal financial freedom, exactly as we promised at the outset. Now, let's truly talk about the immense power of scalability. Imagine that initial $750 annual dividend payment. What if you consistently added just $100 per month to your portfolio, or $200? What if you diligently reinvested every single dividend payment back into more shares? Over time, even seemingly modest contributions compound incredibly powerfully. That $25,000 initial investment doesn't just sit there. It becomes $30,000, then $40,000, and rapidly beyond. As your principal capital grows, so too does your annual dividend payout, often at an accelerated rate. A $50,000 portfolio, built up over several dedicated years through regular investments and strategic dividend reinvestment, could effortlessly be paying you well over $1,500 annually. A $100,000 portfolio? We're talking $3,000, $4,000, or even more every single year, entirely passively. This isn't a speculative pipe dream. It's the undeniable mathematical reality of compound growth and disciplined, consistent investment. Think of it this way. Each dollar you proactively add now isn't merely a dollar. It's a tiny future dividend-earning machine, diligently working tirelessly for you around the clock. The long-term potential here is absolutely staggering when you patiently apply both foresight and financial discipline. Your future self will undoubtedly thank you profusely for every single dividend check you strategically acquire. So how do you actually start building your own robust, ever-growing income stream today, right here, right now? It's genuinely simpler than you might initially think, and you certainly don't need to be a financial wizard or a Wall Street insider. Your very first, most fundamental step is to open a reputable brokerage account. Actively look for established online brokers that specifically offer commission-free stock and ETF trading. This is key for beginners. Many excellent user-friendly platforms cater specifically to new investors, making the entire setup process exceptionally straightforward and remarkably accessible. Once your account is successfully opened and funded, even if it's initially with a modest amount, your critical next step is proactive research. Please don't just pick stocks randomly. Diligently utilize the powerful tools, strategies, and extensive knowledge we've discussed throughout this entire video. Actively seek out companies with an impeccable long history of consistently increasing dividends, robust financial health, and a genuinely sustainable forward-looking business model. Remember, always prioritize unwavering quality over mere quantity in your selections. Starting small is not just perfectly okay, it's vehemently encouraged. You absolutely do not need tens of thousands of dollars to begin your journey immediately. Begin with what you can comfortably afford to invest, even if that's just $50 or $100 a month.
The single most important thing is to start and then rigorously maintain unwavering consistency. Develop a powerful habit of regular contributions, even if they appear small at first, because relentless consistency is precisely what powerfully fuels the compounding effect. To help empower you further on this transformative journey, I want to specifically direct you to some truly invaluable, empowering resources. For foundational, timeless investment knowledge, I highly recommend essential books like The Intelligent Investor by Benjamin Graham, widely considered a cornerstone classic, and The Single Best Way to Boost Your Retirement Income by Mark Lichtenfeld, which specifically delves into practical dividend growth strategies. For comprehensive online research, reputable financial news websites such as Investopedia, Morningstar, and Seeking Alpha consistently offer deep dives into critical company financials and expert dividend analysis. They provide professional, data-driven insights and essential market data to help you make truly informed, confident decisions. Furthermore, actively explore the powerful dividend screening tools readily available through most established brokerage platforms or specialized financial sites. These sophisticated tools allow you to efficiently filter companies based on crucial criteria like dividend yield, dividend growth rate, payout ratio, and vital market capitalization metrics, making your research process significantly more efficient and targeted. These carefully selected resources are your most powerful allies in accurately identifying those strong, resilient dividend-paying companies we've talked so much about, helping you intimately understand their underlying financials and immense future potential. Arm yourself with knowledge. It's genuinely your most powerful compounding investment. This journey into dividend growth investing is an undeniably empowering one, offering a clear, tangible path to genuine financial independence and a more secure, prosperous future. If this comprehensive deep dive into passive income generation has powerfully resonated with you, and you're now genuinely fired up to decisively take control of your financial destiny, here's precisely what I need you to do right now, immediately. First, smash that like button. It truly helps this valuable content reach even more people who can profoundly benefit from its insights. Second, subscribe to my channel and hit the notification bell so you absolutely don't miss any of my upcoming videos where we'll continue to relentlessly explore powerful strategies for building sustainable wealth. Third, generously share your biggest takeaway or your very first planned step in the comments below. I genuinely love hearing from you and actively engaging with this incredible supportive community. Finally, and most critically, don't let this newfound knowledge simply sit idle. Take immediate, decisive action. Head down to the description right now. I've meticulously compiled a precise list of direct links to the reputable brokerage platforms I mentioned, along with direct links to the very best dividend screening tools and all the recommended reading materials. These aren't just casual suggestions. They are your direct, streamlined pathway to immediately beginning your own powerful dividend growth journey today. Click those links, open that account, and start researching your very first dividend stock. Your financial freedom fundamentally begins with a single decisive click. Start building your robust, ever-growing income stream now.